So Lehman is defying the odds and appears to be mounting a comeback. Bloomberg's David McLaughlin joins us now with more details on this story, and it's a very interesting one because it's not the typical strategy that you pursue after you go bankrupt, is it?
That's right. When a company files for bankruptcy, if it's going to liquidate, if it doesn't have a future as a going concern, usually sells its assets quickly, pays creditors, and wraps things up. In this case, Lehman was so big; it was the largest bankruptcy ever, with about more than $600 billion in debt. Assets that are very complicated, like derivatives and real estate, that it has to take, it says, many years, probably several, maybe up to 5-7 years, to repay creditors as it winds down these assets.
Are the creditors happy about this? And kind of, I'm sure they'd love to have their money today, but Are they happier that maybe if we wait a little bit, they'll get more money? Well,
in general, although as the case has progressed, there have been some objections here and there, the overall strategy creditors have not objected to. Lawyers we've talked to have said that, in general, they recognize that it's going to take a while to get paid, and if they want the highest recovery possible, it doesn't make sense to just dump them into illiquid assets into the market right now, especially with real estate.
Which you could understand. I'm sure even the creditors don't want to have a fire sale and lose the value that they could have in 3, 4, 5, 7 years. What about the cost, though? It's not free, obviously, to run the company. They have a lot of monthly costs. They have a decent amount of employees. How much is it costing?
Well, as you said, the fees are approaching $1 billion at this point.
Staggering the numbers.
After 2 years. And that covers Alvarez and Marsal, which is really the big price there. Also, Lehman's own
Brian Marcel's firm,
Alvarez and Marsal,
right?
And as well as Lehman's law firm, Weil Gotshal. But Lehman also has to pay for the lawyers and advisors of its creditors. It has a separate law firm for all the litigation it has. So there are so many lawyers and advisors working on this case. It's easy to understand that it's become this big. And it's going to go on for years. So
that's above and beyond, by the way. We're showing here monthly payroll, $45 million.
Right.
Legal fees for their lawyers and creditors' lawyers, etc., are above and beyond. This is just the people working for Marsal to deal with the assets that they've got.
Yeah.
All right. So Lehman continues, but we should remind everybody, we did have, 5 million jobs were lost in the first 8 months, actually, after Lehman's collapse. Over 1 million more since then. Just some more numbers to throw at you. And a lot of those pink slips are really being doled out all over Wall Street. Well, joining us right now to really talk about that angle and how hiring on Wall Street has changed since Lehman's failure is Roy Cohen. He spent 10 years providing career counseling and outplacement support to Goldman Sachs. He's the author of the Wall Street Professional Survival Guide, Success Secrets of a Career Coach. Roy, good to have you here with us. So how have things changed? Did the last couple of years make a difference in terms of hiring?
Good question. Lehman was a turning point, but before Lehman's collapse, Wall Street had changed irreversibly. Folks were losing jobs, but they weren't as much on the radar screen. The Lehman event was just so profoundly large that vast numbers of people were unemployed, and then it began to have a domino effect. So other companies, other folks were cutting back. So
we should point out, by the way, it is the anniversary today.
Yeah.
Some people may forget. It's not a great anniversary to remember.
Right.
Have we reached, do you think, the bottom yet as far? Meredith Whitney says we're going to lose another, what'd she say, 80,000 jobs?
80,000. Some say that's conservative, that estimate.
Over the next year and a half.
Meredith Whitney is a very smart individual. I don't see her running for the exit for career change.
She's staying on Wall Street.
Absolutely. So the fact is that I think the composition on Wall Street is shifting. Big companies versus smaller companies. Lots and lots of smaller companies.
But you know what folks say out there, that the firms have gotten bigger than ever before in terms of those financial firms.
The big firms.
Yeah.
Yes, but there are lots and lots of smaller institutions. When the Lehman collapse happened, when the major institutions have cut back, who picks up the slack? It's usually a second or third tier institution or an overseas bank that will hire folks leaving the Lehman Brothers.
Is that where the opportunities are at this point?
There were lots, actually, yes.
There were?
Yeah, absolutely.
Is that wave already gone?
No, I think it's beginning to shift. I'm seeing clients clients moving into international institutions, European institutions. I'm looking at folks who are talking to hedge funds now. There's increased hiring there. Risk management is booming as we speak.
Really?
Yeah, absolutely. As we are exposed to increased regulatory reform, it means that there is expanded hiring in those areas.
Someone told me today, actually a hedge fund lawyer told me today, it's like they pressed the reset button for us now. So it's still an interesting time. It's just going to be different. And you see, for example, in examples like Goldman Sachs, the prop trading crew is going to leave, but maybe they'll start their own fund, and that's what you hear stories about a lot on the street.
And they'll probably get enormous backing from Goldman Sachs to start their new fund.
Roy, what about everybody was concerned about that regulations here in the United States are going to be tougher than what we'd see maybe in other countries, and we'd see the shift of U.S. employees going outside the United States?
Wall Street folks are historically very rooted in a community, and it's hard to get them to move. Over time...
Although Ken Feinberg could do it.
Well, Ken Feinberg probably has many residences and lots of transportation to support whatever move he makes. So, the fact is that people tend to be rooted where where their careers have unfolded. So,
so that's just
hard.
BS, those concerns.
I think so.
Wow. Because it was such a big issue for so long that a lot of the Wall Street firms were saying, we're going to lose all our top talent, they're going to go overseas.
No matter how rooted you are in your community, say it's New York, if somebody says, I'm going to give you double the money if you move to Zug, Switzerland, you're gone, I'm sure.
Well, maybe not. The fact is that so many Wall Street folks have two career families, kids in school, and that can be very disruptive. We're in Switzerland. Zug, Switzerland is not exactly an easy commute, even if you do it on a weekly basis. So the fact is,
it's terribly boring. But Mark Rich was there for a long time.
All right, we're going to have to leave it there. Roy, thank you so much.
You're very welcome.
Here's his book, by the way, The Wall Street Professional Survivor Guide.
Yep, and I want to say thanks to David McLaughlin also for breaking down and reminding us of all those numbers.